Thank you for joining me. I want to go over what is growth investing. And growth investing is arguably the longest term investing strategy that you can think of because you're not looking for short term profits, you're not looking for the price to spike, you're not looking to sell in a year or so. You're generally just looking for a company that is growing currently at a reasonable rate. So it's not based on short-term profitability. You're not necessarily looking for a company that is profitable right now, but you are looking for a company that is going to be profitable at some point in the future. So there's obviously no dividend because you want the company to retain all the profits that they have, and you want them to invest all the profits into whatever they're currently doing. So you don't want a dividend. You're not hoping for a dividend at any point. The dividend might come into play years down the road when the company is done growing or when the company has gotten to a reasonable place. But you're definitely not investing for a dividend right now. What you need to pay attention to is revenue growth, which is obviously the main thing in growth investing. It's all about the revenue growth. So you're looking for a company that is growing at least double digits, 30, 40, 50%. Sometimes you can find companies that are growing at, even triple digit percentages every year. Obviously, that is unsustainable in the long term. But if you can find something like that, obviously you need to figure out the long-term profitability thing. But companies like that are obviously hard to find because generally they don't even IPO until they're done growing at, triple-digit percentages. So you're looking to make sure that the cost, which is cost of revenue or cost of goods sold, or all the expenses of the company, are not rising as fast or even faster than the revenue is growing. So obviously, if you were to graph the revenue growth and the growth of cost, those should intersect at some point, or rather those should be going away from each other, with the revenue growth going up and the costs not going up quite as fast. Now, you need to hit the like button, and then you need to figure out what is the long-term profitability of the company. Obviously, if you don't see any way that the company is going to be profitable at any point ever, then it might not be a great investment. But if the revenue is growing faster than the expenses are, sooner or later you hit a point where the company is profitable. If the cost of revenue is currently rising because they make some short-term investments, or they build a new factory, or they have one-time expenses, you can probably disregard that, but you need to pay attention to the shareholders' letters and the explanation of the cost that they're incurring to figure out if it's a one-time thing, if it's continuing, how long is it continuing, and all those factors. So if you do have a company that is growing at, high double digits, 30% is really good as growth for a company. 50% is amazing. 100% is unsustainable for even a few years. Currently, you have a Tesla that is growing at over 100% year over year. Amazon was in that place for a long time, but look for the revenue, look for the cost, make sure those are doing well, and then figure out, first of all, how long it will take to get profitable, and if there's ever a chance of high profits. And if all of those hold true, then you might be looking at a good company to invest in, but obviously not a good company to invest in if your horizon is a couple years or so. These are all companies that you want to invest in and leave them alone for like 5 to 10 years. And obviously keep an eye on them, make sure that the revenue growth isn't slowing down, make sure that the business model is still viable, make sure that they're not getting disrupted while disrupting other industries, all that kind of thing. But if you're looking for something way down the line, you can find a really good deal in companies right now that are not profitable currently, but their share price might increase like tenfold over the next 10, 15 years. And those, if you can find them, those are generally good companies to invest in. But as Warren Buffett always says, you need to fundamentally understand the business, and you need to make sure you know that the company can be profitable at some point. So make sure you hit the like button, subscribe if you want to. I'm coming out with more videos every day before market open. I hope you have a successful day.